We had a panelist from Uganda, but he had a last-minute emergency and didn't make it. But the gentleman over here will help us get through it still. I might challenge Charles to some questions about Uganda. I know he cuts across, but yeah. So I think we've been introduced. So I guess we'll just get on with it. Maybe I'll start with, we have two gentlemen from Rwanda. So maybe we can start with Rwanda this time. So Charles, you can tell us about the Rwandan market. You guys have always been touted as having better ease of doing business index. I spoke to someone and they said earlier that developers are now shunning Kenya and going to Rwanda because of what's happening here. So maybe you can tell us what gives you that edge and just a brief overview of what has been happening in the market.
Thanks, Shadrach, and good afternoon, good evening, everybody. I think it's always difficult when we are standing between you guys and beer time. But I think some of the things that are happening back home in Kigali are really not rocket science. It's really around getting systems to work. That you can sit in the comfort of your hotel room here at the Pullman and apply for a construction permit and know that you're going to get it and get the right answers and get the checklists done. To know that if you have acquired a property from Heri in central Kigali, that you know that it is zoned for X when you're seated in on an aeroplane somewhere flying wherever you're going. So just to get things done online and click away from wherever you are, I think is one of the biggest things. But also, as people in the real estate world, there are certain critical things that really matter to us, and time is money. So related to the permitting process I mentioned earlier, how long does it take to get a construction permit? Somebody can lose their job in the municipality office if they don't issue it in 30 days. So it's very, very simple. It's just an easy way of knowing what needs to be done and ensuring that it is done, and holding people in positions of responsibility accountable when they do not deliver. Thanks.
Okay, and maybe just keeping that conversation in Rwanda. Earlier we had a very interesting presentation from Jeff of ABSA, and you could see that even as the East African countries are bound to lead in economic growth over the next couple of years, and not just 2025, but I think looking at about the next 4 years, you're seeing average growth rates of 7% across Uganda and Tanzania. Kenya is lagging behind at 5% for obvious reasons. So Craig, looking at what you are doing with Kigali Innovation City, how do you, there's a bit of FDI you're attracting and a lot of interest you're attracting from foreign investors. So maybe you can tell us a bit about that and why you think Rwanda is best positioned to attract this investment compared to the other East African countries.
Yeah, thank you. Our project's a little bit unique. We've got some fantastic shareholders. Our two shareholders are Africa 50, and then more importantly, the Rwandan Development Board, who we affectionately call the Ministry of Getting Stuff Done. So, Charles kind of alluded to a little bit. My project specifically, we are in a free zone, so we have an even more streamlined process than what Charles was talking about. We are quite fortunate too. Probably 70% of our inquiries come from outside Africa. Rwanda is really, punching above its weight, particularly in Europe. We do a lot of work with the French, Germans, vaccine research, that type of stuff. We have 4 international universities in our project already from the US. And Rwanda's seen as a soft landing in Africa, and everything, the systems work really well. So our project being in a free zone, we get a lot of interest from outside of Rwanda and particularly outside of Africa.
Okay, thanks for that. And now maybe coming to Tanzania, Heri. So Kenya and Tanzania has always exchanged friendly fire. A segment of us, especially on social media, we're very active and a section of us thinks Tanzania is overtaking us very soon. Looking at a key for FX earner for both countries, tourism, for instance. Tanzania 5 million visitors last year, Kenya 2.4, so we are really lagging behind. You've heard a bit of infrastructure investments recently. You have a new administration that I think has instilled a bit more confidence in investors. So maybe you can tell us about that and how that is impacting the real estate market in Tanzania.
Thanks, and good afternoon, everyone. I'm happy to be back in Nairobi. Really not sure where to start because there's so much to say about Tanzania, and much more good than bad, as was the case some time back. Perhaps I can just comment first of all about the economy in general and the impact that that's having on various sectors, and then specifically on real estate. Health, to assess health, you need to look at indicators. The banks in Tanzania are extremely profitable. NMB, which is the largest bank, I think has about $200 million in profit last year. Balance sheet's growing. So the economy, as reflected by credit sector growth and the performance of the banks using one indicator, is obviously healthy. We have seen significant investment as reported by the investment center, and that's quite broad-based. It's investment in hospitality, which you touched on. There's a lot of investment in mining, particularly new minerals, which are scattered around the country. And then we also see the emergence of real estate as an asset class, which is starting to get investment. But I want to touch on something else which is overlooked, and that is that all these markets in East Africa have stock exchanges, and capital markets are established from a framework perspective. What we have noticed in Tanzania is an explosion in capital market activity. Specifically, I'll give a couple of examples. We have seen municipal entities issue bonds which are oversubscribed. We have seen a number of banks issue bonds, whether it's SME financing, infrastructure financing, green financing, and other parameters, all oversubscribed. Most recently, the government of Zanzibar has issued an Islamic bond, which was at about $500 million in size. And somebody from the stock exchange told me a couple of days ago that it is 130% oversubscribed. So what we are seeing is the arrival of a savings culture, and this is translating into money going into instruments with fixed income. And this is quite interesting, particularly for real estate investors wanting to do projects and unsure about funding. There seems to be a lot of appetite in the market. So overall, I think confidence is very high. I can come back to talk a little bit more detail about the real estate sector and trends within the different spaces. But I'll just finish with one last comment on hospitality, which you touched on. We have many wonderful parks. Obviously, Zanzibar is iconic. Something that is overlooked is how much of our national parks what size they are in general. And the largest one, which is Ruaha, is basically bigger than Rwanda as a country. So, we're very serious when it comes to parks, and yet we're only scratching the surface with, the obvious suspects, Ngorongoro, Serengeti, Zanzibar leveraged. There's a lot of untapped opportunity in other parks like the Ruaha. So Ruaha is 20,000, and then the Selous is 30,000 square kilometers. So these are the two big ones, which are virgin. Very limited investment has gone in. Thank you.
Okay, great. So maybe coming a bit back home now, and this is to you, Asef. When you hear about the level of confidence in Tanzania, it pales to what the sentiment back home is. Kenya has obviously traditionally led East Africa as far as economy-wise and the real estate sector is concerned. But the past few years, of course, have been very challenging from an economic perspective and chilling volatility. You can see even economic growth-wise, we're not sort of catching up to the rest of the East African countries. So how do you see the sector recovering from this, the real estate sector, that is?
Yeah, thank you, Shadrach. Yes. I'm quite new to Kenya myself. I've only been here since January, but and I do hear a lot of this negativity about Kenya compared how the past few years have gone, and also things like the comparison as you're making with some of our neighbours here, like Rwanda and Tanzania. Maybe my perspective is that out of these sort of situations, you do get a stronger outcomes, and there's two key themes that I'm seeing, which I think will stand Kenya and the Kenyan market in good stead. First of all is diversification. Like if you were a developer before who specialized in one sort of thing, maybe high-end properties, and you're making those developments and those high-end properties aren't going, they are looking to diversify, and ultimately that will make those developers stronger because they're increasing their skill set and they're not just looking at what they were previously looking at. And the second one, which I find very interesting, that's happening here in Kenya compared to some of the other markets that I've come from before, is just innovation. The situation is forcing innovation, and if I give a very small example, I was speaking to a contractor the other day, and we were talking about dewatering, and the fact things are more expensive here, so typically for dewatering, you need to bring pumps into the country, or you need to acquire those pumps. If those pumps are more expensive, they're looking at different ways of using the channeling system, which has been around for thousands of years, but ultimately to reduce those costs. So I think those two factors I'm seeing quite a bit here: diversification and innovation, and therefore I'm probably not as pessimistic as some of the Kenyans in the room today.
Okay, so I'll come back to Rwanda, our leader. Okay, let me not put it in quotes. Our leader in innovation and sustainability. So maybe you can tell us a bit about what's happening around that space in the Rwanda context, Charles.
I think maybe three particular projects, since we're in a real estate room, come into mind, and one I'll probably ask Craig to talk about it a little bit more in terms of numbers and the Kigali Innovation City. But we have gone a deliberate route of going green and putting quite a little bit of money in that space. We have a large project that will sit on about, ultimately when it's complete, it will be more than 200 hectares. And a lot of FDI money has gone into it from the likes of KFW. Our Social Security Board has put in land. I think the first phase is about 2,000 units seated on 16 hectares of land. It's called the Green City Kigali. And the way that project is particularly structured is that our Social Security Board has brought in the land. KFW has put in the financing for the infrastructure, and the green component, forest parks, that's an investment of government, and then the real opportunity for the private sector and the developers in the room and elsewhere is to come and actually deliver the houses with some off-take instruments in place. Happy to talk about that individually after this. The second one is, I think I saw the gentleman in the room here, Hassan, the largest probably PPP project, and that has got an EDGE certification, seated on about 30 hectares of land. I think on completion there'll be about 2,500 houses. The first phase, on completion, it will be about $135 million. The first phase that took, that was worth $25 million on 5 hectares. People are already living in their houses. It's completed. An interesting model. Government offered the land, did the infrastructure, the private developer came and set up a factory to actually do the alternative technology and deliver the houses. And then there is an affordable housing mortgage that was structured with the World Bank. So those are some of the innovative ways in which we're trying to address our green sustainability and housing solutions.
Okay, and so still on that innovation city at KIC Creek, you do have a couple of universities within the KIC. Can you speak to us about any student housing activity happening in Rwanda? I think in terms of looking at the rest of the East African countries, if you look at Kenya, I think Kenya was a leader in terms of doing PBSA with ECON and the Kwetu student housing. I'm not so sure about activity in Uganda and Tanzania, but with your model within an innovation city, that seems like a setting within which such an asset class should flourish. So maybe you can tell us a bit about student housing in the context of KIC.
Yes, so we have 4 universities in our project, and hopefully next week we'll have 5. And we're looking at a population living on campus of students at any one time of between about 4,000 and 4,500 students. So the challenge we have, or the benefit we have, is virtually every single student on our project is on a scholarship. So our students, university at the moment, it's about 30% Rwandese, and the rest are from the African continent, and they're coming to our project on scholarships. So the model we're working at the moment is offtake agreements with the universities. Kigali and Charles will tell you about the accommodations, struggles we have at the moment in terms of supplies. So we're going to take about 4,500 students out of the city. We're putting a model together. We've got a bit too much equity already in the project, so we're just trying to trim everybody down a little bit, which is a nice problem to have. We've got our debt organised as well, and the process is to sign a direct offtake agreements with the universities and take the parents out, take the students out of the decision-making process because of the unique side with scholarship funding. And then that scholarship funding will be used to pay for the operator model that we're looking at. So we're starting with about 1,400 beds towards the end of this year, and then we're ramping up to about 4,500 beds on campus. So the direction from the President is that he wants every single student at KIC to be living on campus. So.
Right, great. And jumping again back into Tanzania, Harry, what are you seeing in terms of, is there anything that's happening with the government policy side that has unlocked a bit of the FDI and renewed investor confidence that you have in Tanzania, other than the infrastructure and improvements in tourism that you spoke about today?
Yeah, good question. I think the stable economy, as I mentioned earlier, stable political environment, this is the platform for investors to come naturally. Some elements of government policy are a concern for investors. Obviously, in the build-up to elections, there's always tension around the opposition. But more relevant to this group is recent two elements. One is that the shilling has been appreciated significantly. It's one of the worst performing currencies in the world. And obviously government policy now to counter the depreciation is for all transactions to, by force, be done in local currency. And obviously if you've got investors, many of them sitting here, wanting to chase dollar returns, that becomes very complicated. Now, despite this trend with the shilling and the policy sentiments from the state, what we've seen on the ground vis-a-vis real estate asset class investments is life has gone on. And I'll just give our focus maybe on two sectors. The first one is residential. And we have observed that in the prime areas of Dar, in the last 18 months, basically projects that are under construction are going to double projects that have been completed historically. So there are thousands of units in the prime area under construction. This kind of explosive investment in the residential asset class has not been seen. It is, and when there was a semblance of it a few years ago, it was driven or dominated by public sector capital, national housing, and a dynamic CEO then, and the pension funds. Today, a lot of that capital is coming from the private sector, and perhaps controversially, it's coming from the Far East. This is causing challenges around consumer confidence on quality of build, but also the spreading of love, as it were, around the supply chain inputs. But there is heavy investment happening in the prime residential asset class in particular. And obviously the other one is hospitality, which has seen explosive growth, particularly in Zanzibar. I think there was a panel earlier that touched on that. So there is, again, some projects in Zanzibar are having hundreds and hundreds of beds being added on one particular site. So that's very good growth in Zanzibar, and I think there is a capacity issue which the government has been moaning about up north. And obviously from the investors' point of view, well, the investors want to get an address in the Serengeti, Ngorongoro, which is complicated, although the Serengeti is very large. But Ngorongoro definitely is very, very complicated. And from the government's point of view, they want to see more investors. But either way, the explosive growth we've noticed in Zanzibar hasn't arrived in the northern circuit in the same manner. And as I alluded to earlier with the Salou, Ruaha, Ikumi, and some of these other wonderful parks in the south, there's very little investment started there. So things are moving. Quickly just on retail is finally back. We've got about 100,000 square meters under construction in Dar, which has been dead from a retail point of view for a long time. Commercial remains limited, and industrial also remains somewhat limited.
So just a quick one on that huge influx of residential units that you're talking about. So is this demand? Is this fueled by demand in the market, or is this capital that is looking for opportunity and has found an opportunity in terms of availability of land and the node being attractive? And it's one of those where there's supplies coming onto the market, and then whatever demand is going to be there, we pick it up. Then after some time, then you have this glut that the market is stuck with for a couple of years.
Yeah, I think it's a little bit of a confusing situation because this growth is leading to significant land price escalation. So prime assets in Dar were probably fetching about $1.5 million, approximately say US an acre. And now some transactions in these areas are trading at $3 million, $3.5 million an acre. So for those who are selling, we're very happy. For those who are buying or wanting to look at sound economics, this is a questionable trend. And then secondly, in terms of the supply, a lot of it is at premium price points. So there isn't strong evidence to suggest that there is demand for all these units. If I was to speculate, it would appear to be that people have idle capital. And I won't speculate further, I'll just say idle capital, and they're therefore taking advantage of that. But the economics on the ground don't quite reconcile with the trends that we're seeing.
Okay, I mean, that's interesting because it puts Dar on a pathway closer to what we've seen in some segments of the Nairobi real estate sector, segments, or rather nodes, like say Kilimani and Kileleshwa, where now you have a lot of supply that the market is not picking up, and land prices where that cannot transact at those levels because the numbers just don't make sense at certain levels, like the $3.5 million an acre we're talking about for some parts of Nairobi. Okay, picking up on what you mentioned earlier on the dollarization of the market. We saw it pick up in Kenya, especially post-COVID, and following the depreciation of the shilling about 20% over 1 year at some point. And I recall, like in Uganda, for instance, they even enacted a law that prohibits leases being signed in foreign currency, but I think it became difficult to implement, and they had to pack it and leave landlords and tenants to negotiate. So in the context of the other East African countries, in Kigali, for instance, is this something we're seeing, Charles, in the market around, move away from dealing in francs to dollars, or has Kigali always been a market that prefers to deal in USD?
I'm not sure the preference is the right word, but we do have similar situations like what Harry has mentioned, that from a policy perspective, the regulator, in this case Central Bank, will come up and release instructions to the effect that it is prohibited to transact in dollars. But the implementation of that becomes very difficult in the event where the investment has been done in dollars, or the borrowing has been done in dollars, and therefore it has to be paid in that same currency. So it's usually a little bit, it's easier said than done, especially where in certain sectors you are allowed to actually transact in dollars if you're in the tourism space, what have you. But also, and maybe my friends from DND who are doing the first ever branded property in Rwanda, serviced apartment property, Best Western, or my other friends who are doing the other serviced apartments, you find that from a hospitality space, because there's a thin line between hospitality and real estate, if hospitality is allowed to transact in dollars, then almost by definition or by default, real estate would be allowed to transact in USD. So it's a tricky one, but I'll just conclude by saying, if there is a policeman in the room, just know that it is easier said than done.
Craig, you want to add something to that before you come to us?
All our transactions are in dollars.
Okay, very clear.
But exactly for the reason that Charles has said, our funding is in US dollars, our debt's in dollars, so our transactions are in dollars. Right. But we do have the right to use francs as well. So.
Okay, so coming to yourself, looking at the Kenyan context again, over the past couple of years, we had infrastructure fueling growth, especially across Nairobi. Of late, of course, we have the expressway now. There's a Usahihi road that is planned, the highway to Mombasa that is in the works right now. But of course, we are not where we were a couple of years ago. So from where you sit, which sectors are you seeing that have shown the most resilience in terms of for the real estate sectors? Which of those have you seen show the most resilience in light of all the challenges that we've spoken about since morning?
Yeah, I think if we tie it back to infrastructure, maybe it's not so much resilience, but it's more the interest in the future and what the possibilities that the infrastructure brings. So yes, if anyone looks at the Nairobi Expressway, looks at pictures before and after in terms of the impact on residential, you can see there's been a massive difference. And I do think the Nairobi-Mombasa road that you've mentioned has equally got that potential for the future here. So the firms that are surviving are seeing these opportunities coming, and off the back of them, I think there are great possibilities. If you go a little bit away from the residential real estate sector and into things like warehousing and commercial. You've got things like the single gauge railway here in Kenya. Again, you're looking at industrial zones off the back of the railway, and off the back of those industrial zones, you could see the commercial warehousing sectors in particular applying interest. And then you've got the proposed upgrades to the airports, sort of like here in Nairobi as well. So I think, again, if I, like with the first question, have a positive note, yes, it has been difficult, and also there have been a lot of challenges for the various subsectors here, but off the back of those potential very, very big infrastructure improvements, again, I think the future is looking a little bit brighter here.
All right, you can see Julian on his feet, so I'm sure he wants us to wind up quickly. So maybe I'll just give a chance to each panelist, starting with Craig and coming all the way to Charles, to give some closing remarks, and maybe just focus on where are we seeing the market heading in the next couple of years, in the context of especially the strong economic growth focus we're seeing, but then in the respective countries we have the respective macroeconomic challenges. So, if you put all that together, where do you see the real estate market in your country generally moving to the next couple of years as you close up?
Well, for my project specifically, we're going full steam ahead. I had an inquiry again today for another 30,000 square meters. So, we're working very hard to get industry to work very closely with our education component, and all of our existing tenants have already signed MOUs with the existing universities, and it's not necessarily what the industry can do for the universities, but it's very much more what can the university do for industry in terms of driving their business.
Just from my point of view, again, looking forward, it's all about public-private partnerships, and there's two key drivers for public-private partnerships operating successfully or actually happening. One is stability. When you have stability, you attract far more funds. And the other one, and I think this is key for Kenya, is transparency. If that transparency level goes up, then I think the PPP markets will naturally improve here as well.
Yeah, I think for me, I want to touch on infrastructure. I believe the last president who passed on did a massive investment and left a legacy for the country with all of the focus on infrastructure. And I just want to touch on a couple of things that confirm or reveal this journey was started by him. First of all, somebody talked, I think it was yourself, about 5 million tourists. It's actually not 5 million international tourists, it's domestic and foreign tourists. Foreign tourists are about 2 million. Half of those tourists are going to Zanzibar. Now that they're going to Zanzibar, because the ferry service to Dar works very well, the Standard Gauge Railway service, which the President put in place, is running extremely efficiently, transporting about 10,000 passengers a day. We are seeing that some of those tourists in Zanzibar are coming to Dar and getting on the train to go to these parks that are in close proximity, particularly Mikumi and also the Selous, and I think Sedani will in due time have a knock-on effect. So infrastructure has been long required in Tanzania, and its arrival, which was championed by the previous president, has really helped the country. Second comment I would make is that from a resource point of view, I touched on minerals earlier, I didn't touch on gas. We obviously have a lot of gas in Tanzania, and there's an opportunity to export that into the region. But what we're seeing happening now is logistics sector is responding to the gas opportunity. So there's about 2,500 petrol stations in Tanzania, which is more than double the number of branches. and compressed national bank, CNG basically, stations are now starting to arrive. And they will arrive, I think, with scale, because the gas cost versus conventional oil at about 10%. So I think there is a massive change coming in that space. And just this afternoon I was with a Tanzanian investor in the oil and gas sector, and he was raising money to put infrastructure to handle bulk oil delivery, to take it into the region. So I think this sort of that we are many landlocked countries around us, this large space we have in the infrastructure is going to continue to see growth in logistics, and I think eventually that will translate into growth in the industrial asset class, because it hasn't come meaningfully so far.
Thanks, Shadrach. I think mine is very simple. The first one we talked about it earlier, I'll not elaborate, that's an enabling environment, but also around that is investing in what will be the infrastructure, the soft and hard infrastructure around the enabling environment. 3 key deals to watch. One, of course, is the Kigali Innovation City. The second is we're doing a brand new airport. It's not really brand because it's been in the offing for a while. Probably in another 2 years, when you get to Kigali, you'll be landing in a different place. The Bugesera International Airport. And the third one is the Kigali International Finance and Business Center. So a kind of financial hub that is in a special economic zone. I think those will be the 3 major deals to watch that are both enablers of investment, but as well as significant in deal size if you look at the numbers around them. Thanks.
Okay, great. I think we will wind up there. I would like to thank my esteemed panel very much, Asante sana, and to the audience as well for staying with us past 5 p.m. on day 1. And everybody else wants to grab a coffee or a drink. Thanks to you as well. Unless we have time for any questions,
Unfortunately, none.
Okay. Thank you very much. Thank you.
Thank you so much.